Okay, so in this video, I want to quickly explain to you guys how I trade the market maker model, how I look for my setups, so that when you guys are watching my videos where I'm live trading, you're able to understand why I took that certain setup and I don't have to do too much explaining. So how I traded, we would have a move lower and then we'll have a higher time frame point of interest. This could be either a 4 hour, a 1 hour, or a daily fair value gap. And when it's those time frame fair value gaps or order blocks, I'm always gonna expect us to have like an SMT before we move higher. You understand? So as soon as we get that, I mark out my SMT, and then I mark this out as a sell side liquidity sweep. So then there will always be like a fair value gap either here or there will be an inverse. Usually I use an inverse and I don't really wait for a market structure shift here. You don't have to wait for a market structure shift. As soon as you get your close above this fair value gap, that's enough confirmation that you have disrespected that. And then obviously we're gonna wait for a pullback into that. And then you drop down to the lower time frame and you're gonna look for the same model, or you're gonna look for an inverse and then you'll trade back into that. So as soon as we get a push higher, a nice strong push, a nice close above this, then I mark that out as my order block and I expect a pullback into that and a push higher. So if you missed the first entry here, or maybe you were hesitant to take the trade, if you get a nice strong closure above this, that's your confirmation to take the trade. And then I'll take my trade right there, have my stop on this low. Because then if we going to react from this, I'm not expecting us to come back into this fair value gap. In fact, I want to see at least, at most, two candles coming into this, and then we push higher. So that's one scenario. And then there will be, so this is the market maker sell, and then there's the market maker buy model. And then another way I trade is if we already reacted to the point of interest and we're already pushing higher. Now, when it's like this, I will always, especially if this moved impulsively and we have a busy like somewhere here, the same trade as that one on the last video that I made when I was trading during Powell, we traded off of a 15-minute busy. Depending on the strength of the market, we'll see if we're expecting it to pull back all the way down here or just react and continue and leave whatever fair value gap that's here as a breakaway gap, breakaway gap. And then we're gonna expect a pullback and then an inverse and a push higher. So our inverse will be right here. And then we'll same thing, we're gonna have an order block here. As soon as we have a nice strong closure above that, I know that I'm expecting usually we'll have a nice strong closure and then we'll get a pullback and then a continuation higher. So let's get into some real market examples. Looking at Euro USD. Okay, so looking at Euro USD, we can see that there's this previous low that got taken. We have this previous low that has been taken. That's sell side, and we have an SMT right here. So let me actually go down to the 4 hour. Wait. We have a sweep of this low. So this is an SMT. And then right here, we have a balanced price range. That's why we didn't come back and fill the whole thing, or at least like the 50%. We just traded into this fair value gap, stayed into the 0.75 level of that fair value gap. If you look at that, we reacted. And so that shows you that we are strongly bullish, or like it shows good signs of bullish order flow. So you're expecting nice buys, which is hence you see like this next candle, the next day, it was really impulsive and rushed to fill this fair value gap here. So we have an SMT, we have a reaction from this fair value gap, and then we have a nice strong push above that. So that leaves what this candle. We have a nice strong push above this candle. We came back right here. We have an SMT again here inside the fair value gap. So I'm still expecting us to be bullish here. This is the most easiest low I want to see us take. And then we also have these ones here. Let's go on the 4 hour. So if you look at this, that daily order block, we have an SMT inside. This is what I was talking about. When I'm trading with a higher time frame point of interest, I'm expecting to see an SMT. I can't just trade off of an inverse from the higher time frame. So as soon as we get that, we have a balanced price range here. And you can see we reacted to the higher fair value gap. Now you look at this one candle pushed above both of these fair value gaps here. So that shows us that the euro dollar is basically in a rush to get to that buy side or maybe fill this imbalance here. So we had our reaction from this inverse here, and then we have another fair value gap right here. This is the one I'm gonna be looking to see act as support for this week. And if you look at this fair value gap, we reacted to it. We have an SMT. I can already tell that there's an SMT just looking at this. We have an SMT. We have a nice strong closure above that. So I'm gonna expect us to push higher from this. I'm gonna mark that out as my order block. I wanna see us trade into this and then continue pushing higher, coming for all these highs here. That's low resistance. So I'm gonna expect us to push higher, coming for that. This is exactly how I look for my entries. Now, if we're looking at the dollar index, we can see that the analysis here is actually very simple. We have a volume imbalance here. We have a volume imbalance here. Now, volume imbalances act as a magnet to price, which is why we opened. There's another one right here, eh? But yeah, we opened and we traded all the way back up to that, and then we could continue selling. So I'm expecting this is the most easiest low that we can expect to get taken. But then I also wanna see if we can push for these lows here. So I'm also gonna mark those out as my liquidity. And this is a new day opening gap. So levels like this always act as a magnet for price. So I'm expecting us to continue low. I wanna see if we can push. And then if we take a look here on the 4 hour, we have an order block right here. Now we reacted from this on the same day though. We have this volume imbalance. or then we have a gap there, like an opening gap. But yeah, and then we traded back into that, filled that up, and then had a nice strong closure below this. See how we treat that as an order block now. As soon as we get that, you're expecting this to hold and act as resistance. We wanna see our push lower from that. Look how we traded into that, and then immediately rejected all the way lower, coming for this internal low here. So then we also have this low that I'm expecting us to come for. So yeah, when we have taken out liquidity like that, I'm always expecting us to pull back to the 50% of that range, if especially if the volatility has decreased. Like on Friday, we had a push lower, and then towards the end of the day, it got slower because obviously it was ending the week, right? So during the New York session or something, yeah, we might get like a continuation and all that. But yeah, usually when the volatility has decreased, we expect a pullback to 50% and maybe look for a fair value gap or something. Like I would like for us to react to this fair value gap here because we already traded into it also, like right here. So that could act as our SMT, and then we have a continuation lower since on the Euro USD we're expecting buys, right? So on the dollar index, I wanna see sells. We can poke into this, but I wanna see if we do trade into this one, I wanna see us stay on the lower part of this fair value gap. If we do trade into this fair value gap here, I wanna see us stay in the lower part here. If we still gonna be respecting those sells. But yeah, this is my analysis for the euro dollar, for the dollar index. I wanna see if we can come for these lows. That's an easy low to look out for. But yeah, so the sells on the dollar index are making sense. The buys here on Euro USD, they're making sense. Let's see what's going on Nasdaq. So on Nasdaq, let's see. So what I'm seeing here is that we don't have any lows that we swept. It's just been building sell side. So if we look at, we have this push here, taking out that high, and then we pulled back. We didn't take out this low though. I'll just keep that marked out. And then I'm also seeing that here we reacted to this. This could act as an inverse. But yeah, because I'm still expecting, because I'm bearish on the dollar index and I'm bullish on Euro USD, I'm gonna also be bullish here. So I wanna see, I can see we have these lows here. We have this fair value gap here. So the way I always trade, I'll have, like if we have a fair value gap, if we have a fair value gap like that, but then maybe we already traded into it during the London session or something and we traded away. During the New York, I'll always expect us to like come back into that turtle sweep, that low that we made at first, and then I'll target nice liquidity there. As soon as we take that out, break even, take off most of my positions, and then hold the rest for that liquidity, the resting buy side. So that's a little bit like something that can happen here. We do have a fair value gap here, and we do have this low here. Oh, this low here. Let me drop down to the lot anything. We do have this low here, or this one here that we took out. Because just like the other time when we didn't trade all the way to like this one, I think it was this one, or this low here, and then we just swept the internal low and then continued high. So the same thing we should also be cautious because the same thing can happen right here. It might not trade all the way down to this one and just sweep this one and continue high. But yeah, I will always wait for my confirmation. If I don't get that confirmation entry that I showed you guys, I am not taking the setup. So this is some sell side that we swept. So I'm still expecting these highs here to get taken. All these highs here, that's low resistance. We don't have any manipulation that happened there. So I'm expecting us to come for these highs here. So yeah, and then if this doesn't hold, then we'll probably come and turtle soup these lows here. But yeah, I'm going to be waiting for those. Uh, Also on gold, I remember I was looking for buys here. So you see here how we have this previous order block here. We had a nice close above that, and then we came back here. The same thing happened again right here. We have these two candles here, and we have a strong closure above that. I marked that out as my order block. We traded in. Look at the bodies, how they are respecting that. And then the next one came in, and then we started seeing those push higher, came back, filled this fair value gap here, continued higher. Let's just go down to the 4 hours so I can see this. We have an inverse fair value gap and we have an SMT right here. Like I said, on the higher time frames, the 1 hour, the 4 hour, the daily, I'm always going to expect an SMT to happen before I take that trade. Now, right here, we had that move higher, took out these internal highs, all these highs here. So then what happens? We pull back to consequent encroachment of that leg. If you mark out this leg, that's the CE of that move. We pull back to it and then we continue high. And then we came for these highs. I'm still expecting us to be bullish though. I wanna see if we will go for these highs here. I also have the CE of this week marked out because you can also use that as liquidity. Just like that time, the 4 hour. Yeah, that week. I remember there was a week here. I think it was this one. Let's see. No, there was a week here. But yeah, where this turned, there was like a CE of the week. And then I did the analysis live, so you guys saw it. But yeah, so I wanna see here if we can finally get that expansion move because we've been consolidating for some time. I wanna see if we can push past this CE, come for this buy side. So yeah, that's gonna be my bias for this week and also like a tutorial on how I take my trades. So that's kind of like a two-in-one that I just gave you guys. Make sure you hit that subscribe button, hit that like button, and then the models I showed you here was for the higher time frame. On the lower time frame, it's kind of the same thing. As soon as we have maybe our inverse fair value gap, and then we have a trade lower. Maybe this is the 15-minute. Now, if we already traded into it, same thing. And then we have the push. I'm gonna expect us to turtle soup that before pushing higher for those highs. But then, if then this is the a 15-minute inverse, a 5 minute or 15-minute inverse. Sometimes, like during the, and we haven't traded into it, we're only trading into it during the New York session. Then I'll just expect an inverse and then the push high. That's how I catch my entries on the lower time frame. So it's a very simple model. Like if you just back test it and see how it works for you, then you'll be really good at it. But yeah, this is gonna be it for this video. If you're new here, make sure you subscribe. Make sure you hit that like button. Let me know what you wanna see in the next video. And yeah, I'll see you guys on the next one.